Welcome back. Hope you're having a good morning. For starters, the Gift Nifty suggesting we open up in the green. Sustaining that gap is going to be very, very crucial. But we have a lot of stocks to discuss, and to help us out with some analysis, Prakash Diwan joins us to help us out. Hi, Prakash. Good morning. Well, let's talk about the top stock. I mean, in initial trade, it'll be in focus. Kotak Mahindra Bank. So Kotak, well, he's resigned. It was expected that by December we see some action, and that's happened. How do you view the stock from here on? The overhang doesn't completely go away, but at least there is some movement out there. One of those underperformers, your view on the stock? Okay, all right. I think Prakash, I'll be having a bit of an audio glitch out here. Prakash, I hope I'm audible now.
Yeah, I can hear you, Nigel. I can hear you.
All right, Prakash, I wanted your view on Kotak Mahindra Bank. The bank, in terms of stock price move, Kotak Mahindra Bank has been lagging a little bit along with HDFC Bank. But we have got news that Uday Kotak has resigned from MD and CEO position a little earlier than expected. December 2023 was, the deadline. How do you approach the stock from here on?
So I think, Nigel, very clearly, this is a move that is going to be recognized as a very proactive step to, look at succession planning in the bank at a very critical juncture where there are multiple key personnel who are, likely to be retiring towards the end of this calendar year. So my sense is people will start being able to plan out and anticipate the kind of growth that Kotak, with this, sheer strength of its balance sheet and norms that it has pursued, could start doing. So there will be some sort of an appetite that will build up. But of course, people will also want to see the plan, in terms of who's going to be coming in after Mr. Deepak Gupta also takes charge. So there's lots that will happen. But my sense is, the languishing of the stock, this was a big overhang. That's out of the way. So it kind of, at least has a clear trajectory to go forward and get re-rated upwards.
Okay, I think that's, that is correct. I mean, in the last 6 months, the stock has done nothing, right? Actually, in the last 2 years, if you map the trajectory, now perhaps this is the overhang that's out of the way. There's a proper succession plan in place, and the street can move ahead from this issue. The other question that I had for you was on auto sales, because we'll be talking to a lot of them right now. And the big takeaway is that, things have picked up, especially for some of these passenger vehicle makers. Any thoughts? What's your top pick here?
Good morning, Sonia. So I think I'm looking forward to your conversation with some of these OEMs because, it could probably herald or indicate some sort of a change in the demand side, which we've been struggling with some of these players have been seeing struggle. And the likes of Maruti, for instance, where, the very clear focus articulated for the SUV market share acquisition has started paying off, in spite of the fact that, they've just started about launching a lot of newer models. So my sense is the re-rating that's likely to happen in Maruti is going to be much sharper than M&M, which has already got re-rated. So you'll probably see a Tata Motors consolidate, M&M probably, keep on growing as the news flow comes in. But Maruti is a stock to watch out for. They're scaling up big time, and then very soon their production capacities will also start kind of coming up in a significant way for the export orientation to be much stronger than where it is. So I'm quite excited about that. And as a matter of disclosure, I've always had Maruti in my long-term portfolio. Key thing is going to be monitorable is going to be how soon the demand motivates these people to take off whatever incentives or bonus or discounts that were there. At least hopefully they'll not come back in this festive season going forward.
Prakash, two pockets. One is oil is almost at $90, right? ONGC, if you have any thoughts. Oh, actually, it was up about 4-5% on Friday. Is there more here? And the second one is power. NTPC and BHEL, they've been doing fabulously.
So, Prashant, let me take the power thing first, because this is a pocket that's really kind of, rewarding a lot of patience that investors have demonstrated in the last couple of years. And even the likes of BHEL with the qualitative order flow that they're getting is likely to continue doing well. NTPC, of course, has its own share of strengths that's coming into the advantage. But, I keep on pointing out and nudging everybody to look at smaller companies here, which are yet to be recognized. So you have the likes of NLC on the power side. You probably have some of the equipment manufacturers also that you could dip into. But on very clearly on oil, I think there is a little bit of this concern that $88-90 to a barrel is going to start kind of, weighing down heavily on some of these sectors that have done well. But my sense is we'll probably be able to adjust to that because everybody is priced in that 85 to 90 zone. It's if we tend to be closer to 85 at some point later, but winters is always a tougher period for oil prices to cool off. Then you would probably start getting a bit worried. But I would definitely look at the likes of Engineers India Limited, which have a huge hydrocarbon order book, which is
Yes.
in the process of execution to benefit from this.
Sure. Okay.
Prakash, we have Geo Financial Services that will be in focus. The stock has been listed for the last 10 days or so. But this week will be important, particularly from today. It goes out of T to T. It was in that 5% circuit band. Now it's going to be moving to 20%. Your view on the stock at around 240. It listed at more than 260, went down to around 210. But from there, it's bounced a goodish bit as well.
Absolutely. I think the setup has been fairly restrictive for the real price discovery in this particular name. What's going to happen is once it gets out of T to T, it will probably be more freely traded, and which means that the price discovery will follow from here on, and that could be much higher than even what it got listed at, because I know for sure there is a lot of pent up demand from HNIs and PMSs would like to kind of add to this name, given the fact that everything around in that ecosystem, if you look at, is getting re-rated upwards, and there is this whole bullishness in the financial services space, which probably hasn't translated into some of the prices on the stock. So JFS could definitely be one of the key beneficiaries of that re-rating, and that financialization, going to the last mile, a clear articulation of plans, all of that will probably be milestones that will get it closer to a much superior price discovery. My sense is it would probably tend towards the 300 mark in the next couple of months as plans get much more clearer, Nigel. So that probably is going to be the beginning today for that move to happen.
Prakash, any thoughts on GMM Pfaudler? It went up 6% on Friday, and that's the first big move we've seen after that big block happened. The overhang was off, and that day also the stock sort of swung some 10-15% and finally ended higher, if you remember. But there are many investors who like this name and say, the market's good, there's leader and established player, etc. So maybe there's money to be made here. But your thoughts, GMM?
So I honestly don't have any specific input on what triggered that move on Friday. And I'm sure the news flow will probably validate some of that move. But essentially, this space is something which, as I said, we've seen no new capacities come up, but the demand side has been very robust, given how chemicals and pharmaceuticals have actually done in terms of capability enhancement. If you look at, some of them are still struggling, some pockets you might still have pricing issues, especially the ones that are export focused. But the underlying industry, is definitely something which is getting very, very robust. And then there are just a couple of players in that space who have that kind of a reliability or reputation. So it's probably going to be benefiting from that. But I'm not a big fan of this sector at this point in time, Prashant, for the simple reason it's very lumpy in terms of earnings and growth. So there are these phases where you have consolidation, which goes on for a couple of years, and then kind of suddenly you have these sparks. I would rather look at a capital goods space at this point in time, given how the government is looking at expanding all of its expenditure in the next 6 months. So this could probably be a bit sideways at times also.